Hi guys, welcome to the channel. In this video, we're going to look into how much you need to invest by age to be a millionaire. So everyone knows investing is important, but how much does it actually take to get to financial freedom? So what we're going to do in this video is we're going to assume three things. Number one, we're going to assume we want the money by 60. Number two, we're going to assume we're investing in the S&P 500. And number three, we want to use low returns to sort of see if this is somewhat realistic. So we're going to use an assumption of 8% returns a year. So let's go straight in. So if you're 20 years old, returning 8% a year and investing for 40 years, you would require a deposit amount of $155 a month in order to generate $1 million by the time you're 60. Now, this is really interesting because we've assumed low returns here. So at 20, if your returns were more like 10% a year, and we calculate that, you can see you would generate an additional 600,000. And if we were to use real market returns, so for example, the fund VOO, which is the Vanguard S&P 500 ETF, has actually returned on average 12% a year since its inception. So calculating that, had you invested in VOO, you'd be looking at 2.2 million nearly. And again, one of the cool things with this is as compounding goes on, for every one additional year, your compound is going to be more extreme. So if we now were 61, having invested at the rate that we had started at 20, in that 1 year, we would actually nearly see 700,000 just being generated in that 1 year. Now, if we come on to being 30 years old, in this case, we've lost a bit of that compounding time, and so actually we would need to deposit $400 a month at our 8% interest rate in order to be a millionaire by 60. However, again, if the returns were slightly higher in this case and we were 10% a year, then we would be looking at 1.4 million, so about 400,000 difference there. And if we'd invested in VOO, and got the standard market returns, we would have generated over another million, so 2.1 million. And again, really to highlight how compounding works, if that was the case and we got these returns, in that one additional year between 60 and 61, we would generate $299,000 passively. That means we don't need to work for it. It will just continue to generate. And finally coming through, if we're 40 years old, just to highlight the difference that time makes, assuming the 8% interest rate, we would actually have to deposit $1,200 a month in order to gain $1 million by age 60. Again, don't be deterred on this. 8% is a low return for the S&P 500 annually. And so if we went for 10% return, which is very achievable, we would have 1.3 million if we had invested in VOO, so the 12% annual returns. This number is now 1.65 million, and one additional year at that level. So when you're 61, you gain an additional 200,000 coming in that year. And for each year this continues, this number is going to grow and grow and grow. So as you can see, guys, time is really important in this equation. The earlier you start, the less you have to invest monthly. But the key thing is to continue to invest monthly and get these compounding returns. If you like this video, please feel free to like and subscribe. And if you have any questions about how to invest or how to get started, let me know in the comments and I can help you guys out on the channel. Thanks, guys.